of finding brands that capture $1 billion.
Thanks for joining us on Power Lunch. This is Bloomberg Quint and I'm Ira Dugal. Let's get you the headlines. Indian markets shake off some of the morning jitters but still trade with marginal cuts as earnings remain in focus. The Chinese yuan drops to its lowest level in a decade after the Chinese central bank cuts its daily requirements and also raises the possibility of an escalation in trade wars. RBI Governor Urjit Patel will be meeting face-to-face with Finance Minister, who will be chairing the FSDC meet today. The 7-member board of ILFS is not ruling out the option of an outright sale just yet, sources tell Bloomberg News. And Tech Mahindra is expected to post strong growth in the September quarter, aided by communication segment and a weaker rupee. All right, let's first take a look at how the markets are faring. Neeraj is here with us as always. Afternoon, Neeraj.
Afternoon, Rita. Can I ask you what's happening with your PSU banks? Because
yeah, you tell me. I was going to ask you that.
So Bank of Maharashtra numbers are out right now as we speak. That stock is up. I mean, it's a tiny tune, but up some 17-18%. Again, asset quality out there. Union Bank, OBC, almost everything out there has done phenomenally well the last couple of days. And the numbers, maybe the market didn't expect too much, but they're doing better.
The numbers are not bad at all. You're absolutely right. The quarterly numbers from some of these banks have not been bad. Some of them which were in deep losses a year ago have shown some turnaround. It's not to say that the entire environment has changed, but basically, some of those recoveries are starting to come in dribs and drabs.
Yeah.
Let the full set of numbers come out, let the biggies come out, but you're absolutely right. There is an improvement in performance. So I don't know if that is what is being taken note of. There was some talk, loose talk doing the rounds, that there is hope that the prompt corrective action framework would get eased up after this public spat between the RBI and the government. I don't know if they're holding on to that as hope. I don't know if they're taking optimism also from the SR transaction, where recoveries will be almost close to 100% for the financial creditors. But if you put all the three bits of news together, maybe that's what's happening. But you tell me.
No, or the power news as well, right? Yes. Maybe that too might be. I mean, yesterday's resolution, and if indeed the PPA norms are revised. But yeah, so PSU banks clearly the order of the day, and all of those stocks are doing well. Bank of Maharashtra, the results, boy, so that's up 20%, by the way, I must add. But hey, look at Union Bank, was up double digits yesterday, up double digits today. The OBCs, etc. of the world, and BOB numbers coming out, so important set of numbers to monitor too. But yeah, all PSU banks certainly ruling the roost. Today, oil and gas has taken a bit of a stick. I think that's what's kind of keeping the lid on the markets. So, everything from a BP, HP, IOC to a Reliance Industries to an ONGC, those set of stocks aren't quite doing all that well, and that's one reason why the markets could be sulking a bit. Banks too are not, the PSU banks, and they don't have a heavy weightage on the Nifty bank anymore, say for maybe an SBI. But the Nifty bank index is also not doing all that great. But the PSU bank index could well be doing okay. It was up 8% yesterday, the Nifty PSU bank index, and it's up another 4% today. So this qualifies for the best two-day gain that we've seen in the last 1 year at least, if not longer. So good going really for the PSU banking space at large. Pharma is under a bit of a cloud, though. A lot of defensives are under a bit of cloud. So Dabur is trading virtually at the lowest point of the day. Cipla is trading at the lowest point of the day. So those stocks have a bit of a problem. Last but not the least, Ida, some fundamental changes maybe. So the market starting to like the beaten down name Sugar. The last 2 or 3 days has been doing extremely well. The ISMA, which is the Sugar Millers Association, cut the forecast of production for the next year, and as a result of that, all the names are trading well and truly in the green. So that's the other pocket, neglected, shunned by the market by and large, but like the PSU banks, maybe not in the same vein, but trying to make a bit of a comeback.
All right, Neeraj, thanks so much for that. That's the equity markets back home. The United States is preparing tariffs on all the remaining Chinese imports if trade talks between President Donald Trump and Xi Jinping fail to resolve the dispute. Based on last year's numbers, the value of those remaining imports could be standing at around $200 billion. Bloomberg's Enda Karan reports.
If we don't get any kind of a breakthrough at the Xi and Trump meeting in November, then we're on track for, as our colleagues are reporting, tariffs on the remaining Chinese goods that the US are importing. And then, of course, we head into January and we'll get a further increase in tariffs, in existing tariffs implemented on Chinese goods. And then, of course, there's always a risk of retaliation from the China side. They've made clear that they're not going to take this trade war lying down. So it shows you that we're still very much somewhat at the early stages, really, of this trade war, and there's much further to go. Both sides, or at least Washington at least, is trying to manage expectations, talk down prospects for a major breakthrough at the G20 talks. I think there's a feeling among analysts watching this that the best you could hope for is perhaps a meeting of ways towards some kind of negotiating framework that maybe both sides can agree on starting further talks that may at least slow down the implementation of tariffs. But the news overnight is a reminder of just how far apart both sides remain.
All right, against that backdrop, the yuan slid to the weakest level since May 2008 on signs that those trade tensions could continue to escalate. The People's Bank of China cut its daily fixing, pushing the currency towards the crucial 7 to the dollar mark. Will this lead to some sort of consequent weakness in Asian currencies broadly? Let's get that question across to Alvin Tan, currency strategist at Societe Generale, joining us on the phone line. Alvin, thanks so much for joining us. First, your impression on what are the factors at play which have taken the yuan down to nearly 7 to the dollar?
Well, yes, clearly, as you mentioned, the U.S.-China trade tensions is definitely one of it. The other one, of course, is the fact that the Chinese economy has been slowing. And so a weaker currency is obviously a form of monetary stimulus for the economy. So it's a combination of these two factors, the U.S.-China trade tensions and the slowing Chinese economy. That being said, though, we are doubtful that we will see dollar-yuan trade through 7 this year. We think that is more likely to happen next year. But I think that it is true that even though the dollar renminbi has been edging higher, I think it's also obvious to us that the Chinese authorities are keen to ensure that the move is a very gradual and slow one. They do not want to encourage the thought that there's a straight line depreciation happening consistently.
Okay. Alvin, I mean, there have been periods in the past when other Asian currencies have sort of picked up on the yuan weakness, and there has been a correlation, but it's not always, doesn't always hold true. Would you suspect that Asian currencies would take a cue from this yuan weakness, or is this very China-specific right now?
Well, our view has been that it has been a factor for the Asian currencies more generally. I mean, for example, if you look at Asian currency performance, Asian currencies generally held up well relative to the other non-Asian EM currencies up until roughly about May this year, and then the weakness in Asian currencies started to accelerate, and that you can time that basically to the turn in the dollar yuan exchange rate, which again also started to weaken earnestly starting in around May. So I think definitely the dollar yuan exchange rate has been an important anchor for the entire Asian currency complex.
Okay. What is your broader view on Asian currencies right now? Some amount of the pressure came off because, oil started to flatten out a little bit, at least here in India. We've seen relative calm for about the last 10 odd days, at least on the currency markets. Will that hold, or is it all entirely dependent on how our oil moves?
Right. Okay. We are relatively bullish oil in the sense that we do think that it should be able to hold at current elevated levels. We have the Iranian sanctions coming on, and also Venezuelan crude production remains challenged, so to speak. Now, of course, apart from all this, is that the part of the reason for dollar strength against the EM currencies and also Asian currencies is because of the Fed continues on the hiking path, and that is not changing. I mean, there's been no reason to change that. You were told that the Fed has not given any signals that it is about to step off the pedal. So we do think that this pressure upward on the dollar against EM currencies, including rupee and the Asian complex, is likely to continue in coming weeks and even months.
All right, Alvin, leave it there. Thank you so much for joining us. The yuan clearly the headline grabber among the Asian currency pack, heading towards 7, but Alvin is of the view that they will not let dollar yuan trade above that 7 mark, at least not this year, perhaps. Let's move on to some of the implications of the currency situation onto India as well. India is turning towards China to try and stem the weakness in the Indian rupee. Sources tell Bloomberg News that the government may try and price some of the imports from China and settle them in the yuan. Archana Chaudhary joins us with that exclusive. It's an important one. Archana, what have you picked up?
You're right about this, Ira. Looks like India is planning on planning its moves as far as how then they can take this forward in case there are more currency risks. Like you said, it's only been 10 days that we've had relative peace in the currency markets. So what we've been hearing is this, that India is looking at basically allowing some imports from China to be settled in the yuan, and as part of this proposal, what they will do is they'll try to what they call ring fence some of these commodities, because India imports a lot from China. We have a huge deficit. We have a $56 billion deficit. So what India is trying to do is try and first see how this will work. What they will do is, or at least are planning to do at the moment, is that limit this to 2 or 3 commodities. So maybe start with pharmaceuticals as far as our imports are concerned. Exports are concerned. Say, okay, you can buy in the rupee, we buy in yuan, and then take it forward from there. So negotiations are expected to begin soon, and this will also, of course, help China to increase, broaden the influence of their currency, because there has been already talk of BRICS nations, looking at whether they can move at least half their trade towards, in yuan, do it in yuan, and basically cut risks from the dollar. And this is going to be an ongoing conversation. We're waiting to see what more we'll hear from the Finance Ministry.
Oh, absolutely, Archana. Fabulously interesting story. Many implications, not just for the yuan, for the Indian rupee, but also that long-term story about another global currency chipping away at the reserve status of the Reserve Bank, of the dollar. Thanks so much, Archana, for joining us on that. Let's move on to the domestic big story that continues to play out, the spat between the Reserve Bank of India and the government that is out in the open. Well, against that backdrop, Arun Jaitley, Urjit Patel will come face-to-face for the first time after Deputy Governor Viral Acharya's spirited lecture last Friday. They're all in Delhi for the Financial Stability and Development Council meeting, which is chaired by the Finance Minister. Nikunj Johri, who is outside the Finance Ministry, joins us for Nikunj.
The Financial Stability and Development Council's meeting is currently underway, and this is the first time when the RBI Governor and Finance Minister Arun Jaitley will meet face-to-face after the rift between the regulator and the government is out in the open. Mr. Urjit Patel is accompanied by all 4 deputy governors, although all 4 of them are not members of the FSDC, and also remember, FSDC has members of all financial regulators as its members, and the FSDC takes stocks of the economic situation of the country. And it is expected that today there's going to be a discussion also on the liquidity crisis that is faced by NBFCs, and there's possibly some discussion going to be on this, and probably some steps that the government and the regulators intend to take to tackle the liquidity crisis. Over to you.
All right, Nikunj, let's see what comes out of that FSDC meeting. Most likely they come out with a statement unless somebody speaks on the sidelines of that. Tensions between the Reserve Bank of India and the government have existed in all regimes. The difference this time around seems to be that it's come out in the open in the form of a very public spat. Partly because maybe both sides are not willing to communicate on some of these contentious issues. I caught up with T.T. Rammohan, Professor of Finance and Accounting at IIM Ahmedabad, to talk about the ongoing tensions and the best way to get past them.
Well, it is a bit of a mystery to me, because the issues that have been flagged in the Deputy Governor's speech are not such as to warrant the kind of controversy that we are having. Now, I've been reading all sorts of things in the media, including a report about the proceedings of the last board meeting. And there are indications to the effect that some of the directors nominated by the government were very strong in their expression of their views, and that has riled the RBI top brass. But I have no means of commenting on any of that. There is nothing in the issues that have been flagged that cannot be amicably resolved with a little bit of give and take on both the sides.
Ramamohan, exactly. Let me ask you, there are 4 issues that everybody is talking about. 2 of them are banking specific. One which is this PCA norms, the prompt corrective action norms. And one in the past, there were the issues of, the February 12th circular, etc. On those banking issues, these are fairly routine issues, not something that that should be extended into an independence of the RBI. We've always had this problem of 70% of the banking sector being with the government, and hence there are constant run-ins between the government and the regulator on regulation of PSU banks.
Yes, one thing we have to be clear about is that if the government makes suggestions or provides inputs on matters of concern to itself, such as the infusion of greater liquidity into the system, I mean, that cannot be construed as interference with the independence or undermining of the autonomy. The government has every right to air its views, whether through its officials or whether through the nominee directors. I mean, the nominee directors, of course, are on their own. But if they echo some of the government's concerns, or if the government's own representatives, the 2 finance ministry officials, air the government's concerns, or they want to make some suggestions, that cannot be construed as interference with autonomy. Only if the government issues clear directions which are in conflict with the positions of the RBI, can you say that there is an attempt to interfere with the autonomy of RBI?
Yeah, and I'd like to point out that on that February 12th circular, when it came down to issuing directions, the government actually backed off. So they haven't done so. Perhaps, Professor Ramamohan, the more contentious issues are the issue of the payment regulator, taking that outside the purview of the RBI, and then the issue of the RBI's reserves, which certainly seems like it would warrant a public airing of discontent from the regulator's end.
Yeah, so on the about the payment regulator, what we are having is a discussion about the scope of the central bank's activities. Now, we've had similar discussions in the past when there is an attempt to take the public debt management function out of RBI that was given up. And then there were questions raised about the regulation of the primary market for government securities, whether it should be done by RBI or by SEBI. That discussion has also been given up. But whenever these discussions come up and questions are raised about the scope of RBI's activities, again, that cannot be construed as interference with the autonomy of RBI. Once a certain domain has been assigned to RBI and the RBI takes decisions within that domain, and somebody tries to interfere with that, only that is really interference with autonomy. So if in the case of the Bank of England, the regulatory function was moved out of the Bank of England and into the Financial Services Authority before the financial crisis. After the financial crisis, it was moved back into the Bank of England. So when this function was moved out, and neither when it was moved out nor when it was moved back, was it construed as interference with the autonomy of the Bank of England. So the discussion about what functions the RBI should be engaged in is a much larger debate on which the government is entitled to have its point of view. I respect the RBI's position on payments regulation. I do believe that on balance there is a case for payments to regulation to stay within the RBI. But just because the government has brought it up, again, I think it's a bit too much to say that it's in any way undermining the autonomy of RBI.
And the last issue of reserves, Professor, that seems to actually perhaps be the most serious. We don't know that if the government is actually going ahead with either changing the dividend policy or trying to get into the capital base of the central bank and withdraw some of that. But should that happen, I think that perhaps warrants a concern about independence?
Well, again, it's possible for RBI and government to sit down and determine the appropriate level of reserves for the RBI. There are two types of reserves, the revaluation reserves and then the profits that are flowed back. Obviously, the revaluation reserves cannot be touched because, just as they go up, they can also go down. And therefore, the real argument can be about the contingency reserves which they have, which they come out of profits of the Reserve Bank of India. And so there you can have a discussion on what is the comfortable level of reserves which the RBI should be having. And again, this is not something that warrants any huge controversy. And here again, I'm not aware that the RBI, the government has given directions to RBI saying that you should transfer out so much or anything to that effect. So I'm really unable to understand the very strong response which is coming from RBI. It could be that things are happening behind the scenes, which you and I are not aware of. But otherwise, it doesn't seem to warrant the present level of controversy.
Okay. Professor Raman, I want to get your thoughts on the issue of the RBI board, which you sort of alluded to earlier. It's this strange creature. If you go into the RBI Act, it gives it very wide powers. It doesn't preclude it from being a voting body. Yet, there hasn't been voting and we don't have any formal agenda or any formal set of issues that the board can weigh in on. What is your sense of how this board has morphed from being at times just a pure discussion body to at times being a pressure chamber of sorts?
Well, we are, from what I've read, we are seeing some very active discussions on the board. And I think that is to be welcomed. Passive boards are boards that are not really performing their function. So wherever there is active debate, and people are raising issues and raising concerns, I think that is entirely to be welcomed. Now, as to whether the board will exercise the powers which it theoretically enjoys, papers which it enjoys, the powers it enjoys on paper, that's a different matter. The convention has been for the board to by and large, not act as a decision-making body, but more as an advisory body. But in certain circumstances, if the board members feel that something should be put to vote, that, as you rightly pointed out, is permitted by the RBI Act. And we should not be overly concerned if it happens. I mean, there could be exceptional circumstances where there is disagreement and where the board members feel that there is a case for voting. Now, that's perfectly all right. I mean, I would think that's a very democratic way of functioning.
Absolutely. But then, Professor, should there not be a little bit more clarity on the way this board functions? For instance, why not have agendas? Why not have a clear set of issues that the board can and cannot look into? Why not then have voting? And then, for instance, in the case of demonetization, it went through the board from all accounts. Something like the reserves will probably go through the board on all accounts. And then certain members of the RBI board should be allowed to perhaps, dissent, and that should be out in public domain. A bit more sunlight on the functioning of the board is essentially what I'm asking.
Well, whether the views expressed on the board should be made public, I'm not very sure, because then again, there'll be talk about this rift between government and the RBI or the members of the RBI, so we have more controversy. So I'm not very sure, whether the minutes should be made public or the individual voting should be made public, which, as happens in the case of Monetary Policy Committee. We can sort of play it by the ear and let things evolve.
So I'll ask you a last question, sir. What would be your preference? I assume you would want this to get, sort of resolved. Somebody has to be the bigger person in this, sit down, have a conversation, because it's terrible for the economy at any time, particularly at this time.
Well, yes, I think there needs to be clarity on, people's understanding of what central bank independence is all about. I mean, there is independence, but it is independence within the framework or limits set by the government. In the case of monetary policy, an exception has been made whereby statute certain powers have been delegated to the Monetary Policy Committee. But we have not had a similar dispensation in respect of all the other issues that are being talked about, whether it's regulation or the use of foreign exchange reserves and so on. By statute, all these powers have not been delegated to RBI, and therefore it follows that any decision making can happen only through a consultative process, and neither side can assert that its own position must necessarily be accepted by the other side. Government should not do it, and RBI should not do it. They should sit down and resolve it. And as I said at the very outset, there is nothing here which cannot be resolved through a consultative process.
All right, that was IIM Ahmedabad's Professor T.T. Ram Mohan speaking about the dispute between the RBI and the government. Let's move on. The 7-member board tasked with the responsibility of drawing up a resolution plan for IL&FS has not ruled out an outright sale of the company. The board is slotted to submit a plan to NCLT tomorrow. Shruti Srivastava of Bloomberg News joins us with the details. Shruti, what have you picked up?
Yeah, so our sources tell us that the government is looking at various options to ensure that the IL&FS comes out of the current crisis that it is in. Now, tomorrow is the day when the new board, which has been appointed by the government, has to present its resolution framework to the NCLT. Now, broadly, there are three options that are being considered by the board and the government. The first option, which the board is considering, is to sell the company outrightly. Now, that's a tall task for the board given the fact that it's a complex structure of some 348 entities. The second option which the board proposes to put before the NCLT is selling the company in the various subsidiaries of the company in parts. The third option for the board is to infuse liquidity in the company so as to avoid an outright sale. Now, these are the three broad proposals which the Ministry of Corporate Affairs and the IL&FS new board will present before the NCLT tomorrow. In the interim, the main task before the board is to ensure that the company does not default on its payment obligation. So the IL&FS board is considering selling some of its core and non-core assets as the need arises.
All right, Shruti, thanks so much for giving us that update. Moving on, Piramal Capital and Housing Finance looking overseas for capital now. Amidst the liquidity crunch at home, the lender is firming up plans to raise funds through external borrowings. Bhuma Srivastava of Bloomberg News joins us with the details. Bhuma, what have you picked up?
So we basically got to know that how the Piramal Home Finance, they're looking to tap external sources like ECBs, bonds, institutions to raise debt to battle the liquidity crunch at home and to reduce exposure to shorter term debt such as commercial papers and mutual funds. So idea is to move away, find newer sources of financing and just kind of tide over the transitory pain.
Do they have overseas borrowings already?
Not significant.
All right, so it would be a first outing for
much of the way, yes.
All right, Puma. Thanks so much for that quick update. As Puma said, it's against the backdrop of the domestic liquidity troubles that we are facing. All right, I think that's all the time we have on Power Lunch. Thanks so much for watching.